Stocks went on a roller coaster ride on Thursday and Friday. Of course, the biggest moves were reserved for the NASDAQ. And of course, within the NASDAQ, it was the most overpriced and highly speculative stocks that went on the wildest ride. And it got started on Wednesday night. In fact, I spoke about it on the podcast I recorded on Wednesday evening when Meta, formerly known as Facebook, came out with disappointing earnings, and Meta was down about 20% in after hours trading, and it dragged the entire NASDAQ down about 2% at that time. Well, it was even worse when they rang the opening bell on Thursday. Meta shares ended up down 26.6% on the day. In fact, they sold off an additional 1/3% on Friday, although well off the lows. At one point, Meta was down about 3% on Friday, bringing the entire decline from its peak to 40%, which is a pretty big move, solidly in bear market territory. But when you think about the fact that Meta is one of the most widely held stocks among both individuals and institutions, you get an idea of how much damage is being done to the typical stock portfolio. In addition to Meta falling more on Thursday than the Wednesday evening decline, the entire NASDAQ also went down. It fell about 4%, which is a huge move for that index in a single day. And again, the riskier end of the spectrum getting beaten up even more. Look at the Cathie Wood ARK Innovation ETF. That was down 5.6%. Of course, many of the stocks down even more than that. Some of the biggest movers were stocks that were coming out with earnings after the bell on Thursday because the markets were bracing for more misses. So Amazon, Snap, and Pinterest in particular were getting hit pretty hard. Amazon was down 7.8%, Pinterest was down 10.3%, and Snapchat was down 23.6% because investors were worried that if they also reported bad earnings like Facebook, that those stocks would get clobbered.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now
everybody was set up for misses, and what the market did was surprised everybody because all three of those stocks ended up beating expectations, and that resulted in a sharp reversal in those names, which also helped to power the entire NASDAQ up, which rose about 1.4% on Friday. So not nearly recouping the 4% Thursday loss, but those individual stocks did. In fact, Amazon was up 13.5% on the day, Pinterest up 11%, and Snap rose by a staggering 59%. And I think what helped to power those gains was the fact that people may have gotten short in anticipation of a Facebook-style blow-up, and when that didn't happen, they had to rush to cover, and so that likely exaggerated the size of these moves. Again, I think these stocks are all headed lower. I don't think the earnings matter as much right now as valuation. All of these stocks are overvalued, and I think they're going much lower. Of course, there were some other stocks that did move lower on Friday on bad earnings. Two in particular that I want to highlight are Clorox and Ford. Clorox was down 14.5%. Big decline, new 52-week low. That stock is now down about 30% from its 52-week high. The reason for the decline was an earnings miss, and the reason for the miss was inflation. Inflation was driving up the cost of their products. They hadn't fully passed on those higher costs to their customers, which was certainly the case for a lot of companies last year that were lulled into a false sense of security because they believed the Fed that inflation was transitory, so they didn't raise prices, and now they're paying the price in weaker earnings and falling stock prices. But of course, what is Clorox going to be doing? They're going to be raising prices. They didn't really discuss that, but it's certainly going to happen. They have to defend their margins. They need to start raising prices, and that's what's going to happen. Now, as far as the stock is concerned, even though it's dropped considerably, looking at Clorox, I think the valuation is still too high on the stock. It's trading at about 26 times earnings, which I think is rich.
I have bad news for you. If you're not rich by now, you're screwed. And if you're in debt, you're even double screwed. How so, you might wonder? Well, the sad truth is that you're working your whole life to make someone else rich. The mega corporations, the banks, the politicians, everyone is getting richer. They get your money. And what is even worse, they get your time, they get your life. You are not even in a rat race. You're in a financial prison. But what could a solution for you look like? Honestly, I don't know, but I know what a solution for me would look like. It's very simple. I use whatever money I have and I multiply it with 1,000. This could make my life much easier and probably yours as well. If you have $1,000 available and multiply this with 1,000, I believe that this could solve some financial issue for the one or the other. Of course, if you're ugly, you would have to multiply it with much more than 1,000. My name is Markus Dahn, and this is what I decided to do. I decided to 1000x my money. This is not a joke. I know what you may be thinking. What is this guy talking about? How should this work? This is not possible. Well, I made a detailed video where I laid out my plan. And some clever folks might even want to look at this plan and copy it and do exactly what I do. This is just a little hint on the side. You have two options. You leave, you forget what you have seen. You do whatever you're doing and you hope that somehow you get some other results. Good luck with that. Or you click the link below the video. You enter your email address because I'm not showing this to everybody. You at least watch my video on how I plan to 1000x my money. The choice is yours. Make the right choice. Join me. See what a different future you could have. See at least how I plan to do the 1000x. So click on the link below, enter your email address, and I see you on the other side. Your Markus Dahn.